Folks, the great rotation we think has finally started, and it's amazing because a lot of the news media has been using the word "great rotation." You'll remember we coined this thing a few years ago, and we've been waiting for it to unfold. We saw a glimpse of it, certainly throughout 2022, but the bigger rotation has yet to unfold, and yet we really do think it's starting to. One of the biggest drivers here is that we are in a technology bubble. And this is a good chart from B of A Global Research that just shows when we have these different manias, that get investors super excited about a technology, whether it's railway mania in the 1800s, the telecom and tech bubble in the early 2000s, the shale revolution. Remember that back in 2014 and 2015. Yes, these things do, create excitement and investor momentum and piling into stocks. They create fundamental growth, and especially they create CapEx booms in spending on these various industries and technologies. And but what does it almost always end up in? It ends up in a bubble that bursts. And the fundamental reason for the bursting of these bubbles, it's not that these things aren't, phenomenal technological revolutions. They are. It's that there's an unsustainable burst in spending that is simply not sustainable. And these are the lead ups to cyclical peaks in the economy, in the markets, that usually unwind in significant market downturns and recessions. This is one of the biggest we've had. We've been saying it for a while. I think we've finally seen what it looks like when it starts to roll over, and it has only started to roll over. Let's go on to the next. This is looking at a similar phenomenon with these other market tops in the past, when you have a narrow leadership group late in a cycle, and this is comparing the S&P 500 versus the S&P 500 equal weight on a rolling 2-year correlation basis. This is courtesy of Societe Generale. And what it's showing is that these late cycle narrow market rallies, when they roll over, what's everyone been expecting? Everyone has been expecting that this rotation is going to be a broadening out, and it's amazing how you hear the soft landing thesis, that it's different this time. It's going to be a soft landing, despite the record increases in interest rates and the record yield curve inversions, that 100% historically have been a signal of an oncoming recession and a market meltdown. It's different this time. People think that it's going to be different, that it's going to lead to that we're going to have a soft landing and a reacceleration. Well, we started to see this broadening out in the market when the Russell 2000 was going up on days when the Mag 7 were rolling over. But what's been happening in the past several days now? We've seen the breadth deteriorate as well, and so these normally the narrowing of the market, the lack of leadership in a few concentrated names and industries. In this case, it's been the Mag 7, is what is a signal of a top for the overall market. So this great rotation that we're talking about is not a rotation into everything else and a soft landing and a reacceleration of the economy. No, it's a rotation into a much narrower group of stocks, of value-based stocks. Yes, it's small cap is involved for sure, but we think it's commodity-led, it's natural resource-led, and it's going to be the leadership for the whole next economic cycle. And we're going to see this rotation into a much narrower group of stocks. Let's go on to the next. This is, another great rotation kind of chart that the media, that Bloomberg has been kind of touting this idea that the great rotation is a rotation into small cap, and they're showing the Russell 2000 here, the Russell 2000 Value Index. I like the idea that they're saying small cap value at least, as opposed to just small cap in general. But here's a look at what happens when when at the S&P 500, which is the S&P 500 growth index, which is large cap growth versus the Russell 2000 small cap value. So this is more the rotation that we're talking about, a rotation into small cap value. And it was a little bit higher, these two relative indices in the tech bubble, but it's the highest that it's been since the tech bubble. And you can see just in the past week or two that this relationship has indeed, it looks like it's peaked out. It's looked like it's starting to roll over in a significant way. This is how we're positioned at Crescat. We are short large cap growth and mega cap tech, especially, and we are long small cap of value, predominantly in the commodity natural resource industries, and especially in our activist metals positions. So let's go on to the next. So overall, now looking, we showed a similar chart last week from Bloomberg. This is also from Bloomberg Intelligence, showing it's showing the Mag 7 overall net income growth year over year. It's by quarter year over year, and the shaded box area, the 4 quarters on the right side, are estimates. So those are based on analyst projections. And what you can see is that the growth rate of the Mag 7 is most definitely decelerating, and this is the type of thing that makes tops. I just talked about how the spending for tech infrastructure, because of the AI boom, the AI euphoria, has been an unsustainable growth. I think we've seen it peak out already in the 4th quarter. We've seen that actual slight dip in the 1st quarter in growth rate, now expected to drop significantly in growth rate. This is the orange bar for the 2nd quarter. And this is where we are in the cycle now. Mag 7, here's this whole soft landing thesis. This, everyone hoping that we're not going to be going into a recession and that we can have some kind of reacceleration of growth. But what's the true growth been for the Mag 7? It's been flat to non-existent. It's been negative to flat for the last 4 quarters in a row. Do you think that's going to magically reaccelerate, or is this something that's likely to continue to get worse as we see this Mag 7 deceleration and this not this rotation into everything else but Mag 7, but a much more narrow rotation into a narrow group of stocks, much more like we saw in the tech bust. Let's go on to my final chart here. And Apple Computer. So what has been one of the biggest drivers of the latest market rally? It's been this whole idea that Apple is going to come out with some new AI features on its smartphones. It's going to drive an upgrade cycle for Apple. It's been the whole story as to why Apple has reaccelerated here and pushed to a new high. But so Bloomberg did a survey. What are the reasons why you would upgrade your smartphone and your iPhone in particular? And this is a current survey, and here's where people are. Number one, the battery doesn't last long enough. That's the primary reason for upgrading your phone. Number two, I need more storage capacity. Number three, a better camera. Number four, a faster processor. Number five, better screen sight resolution. Number six, physical damage. The very last thing in this current survey is that people are going to upgrade their phone on their new device to get access to new AI features. So I think this is a new narrative that is going to become a little more that is going to play out in the market. We also have faltering demand is coming from China. Of course, because of the geopolitical issues with China right now, so there's this hope. It's just pure hope of a major Apple upgrade cycle that's going to get a reacceleration going. When Apple is one of the 2 stocks in the Mag 7 that has already been in a in a negative year-over-year revenue. Year-over-year comparisons now for 5 out of the last 6 quarters. I don't think you're going to see this growth acceleration. This is another problem, another setup here I think for a peak in the market, this is the AI euphoria bubble. We have this thing that I call creative destruction. I didn't coin the term; it was coined by one of the Austrian economists back in the early 1900s. But it's a truth. It's a fundamental economic truth. It goes back to that first chart that we showed about major technological innovations and investment bubbles around those things. Um, it's they're great innovations, but it's the unsustainable spending and hype around those new trends that creates the peak in the economy, the peak in the growth rates, and ultimately the recession and the market crash. So, uh, I think we have a major market correction coming. It's a broad market correction, but it's going to be led by the Magnificent Seven, and it's a rotation indeed into to value group, and but into a much narrower group of truly beaten up value stocks that are the hope for the whole next economic cycle. That's the natural resource sector. That's how we're positioned at Crescat, both on the long and the short side. uh, you know I encourage you to really talk to Merrick, because I think the timing is excellent, especially for our global macro and long short strategies, where we have the short positions as well as the long activist metals and other commodity positions. But what a great time for the small cap mining stocks that we're invested in at the same time.